Looking for the best opportunities in Perth property? Get the local area expertise you need from Momentum Wealth, WA's trusted property investment consultants. Market insights, advice and representation from award-winning buyers agents and REWA Hall of Fame inductees. Visit Momentum Wealth's website at momentumwealth.com.au to organise your obligation-free consultation today.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi everyone, how you going? Hope you're enjoying a bit of time off over Chrissy. We're recording this in December and everyone's already talking about advent calendars and jingle bells and festive New Year's and no fireworks, I hear, in Sydney on the 31st of December because of COVID-19. It's going to be 7 minutes of it, so it's going to be very subdued this year. So I think a lot of people are looking forward to a bit of time off, hanging out on the beach, listening to the podcast, the Smart Property Investment Show, no doubt, because this is where the best investors in Australia get their information. Believe it or not, that's what I'm told. But anyway, I might be a bit biased. But hope you enjoyed the year that has been the Smart Property Investment Show. And as we gear up for 2021, we're looking forward to what's going to be, I think, a pretty dynamic year in property and property investment. I'm very fortunate, and it gets a real privileged position for me to be able to navigate property investment right across Australia. I can pick up the phone and speak to pretty much most people who either allegedly or have shown they do know a fair bit about property, and also those people who invest in property. So it's really the marriage between investor stories and guys and girls on the ground buying property matched with what the experts are telling us about markets. And data is something which drives a lot of sentiment and commentary around property markets. All property investors at some level have a relationship with data. Some investors have a bad relationship with data and they use it to their detriment, whereas others don't use it enough. So if data isn't part of your repository of stuff that you look at when you're investing in property, you probably need to rethink it. And you'll see these sort of trends and themes, discussions around it emerging into 2021 on smartpropertyinvestment.com.au. So a big focus for us, but fortunately, we're pretty connected in property and we have good relationships with most of, if not all of the big data providers out there, and some of them have been around for many, many years, and I think CoreLogic, and they provide some pretty good information. There's also some emerging data houses coming out of Australia looking at things differently with a different rationale, specifically for investors. And we're going to really get into that today because there's a couple of gentlemen that I've been sort of bought into having some discussions with who are doing some pretty smart stuff, and they're launching something in 2021, but I've got the pre-launch. I've dragged them in. I'm going to work out what's going on. And part of it is going to be a brand new podcast, which they're going to be releasing, and we're going to be hosting it on the Smart Property Investment Podcast Network over 2021. I don't mind the name of it. I think I might have been part of the origin story of it, but we'll get into that as we get stuck into it today. Joining me in the studio, I'm going to call them, they're actually called the Property Nerds. It's a new business called the Property Nerds, nerds being a term of endearment. So we'll do that at the front end. If you've got a problem with that, don't take it out on me. You take it out on these guys, but I think they identify with being nerds. Nerds are cool. Nerds have always been cool. I've been called a nerd myself in the past, maybe not in a flattering way, unlike these two guys. But Arjun Paliwal, he is the founder and the director of InvestorKit. We've had him on the studio beforehand. He's a good friend of Smart Property Investment. He's joining us today along with Kent Lardner. He's from Suburbtrends. No doubt that's a name that you would know. And these two guys have come together to try and do something new in data under the banner of the Property Nerds. Gents, how you going?
Hello.
This is it.
Hey, mate.
Welcome to the future. Podcasting. What are you doing?
Well,
what's going on?
I've got a face for radio, so
don't be like that.
I think the podcast just helps on that front, Phil.
This is exciting. So a new business which has a podcast connected with it, which is going to be part of the narrative and the story behind the organisation and what you're doing. Ken?
Yes.
A lot of people know Arjun because he's on the show a fair bit. I've known you for quite some time, not going to ages, but some people might not know who you are.
They may not.
Give me quickly the 101
of me
story.
I got into the property data space back in the mortgage insurance days. A company called Gemworth back then. It was a Housing Loans Insurance Corporation, then it became GE Mortgage Insurance, and then it became Gemworth. I spent about 7 years in that industry, heading up their underwriting team, had a lot of people looking at a lot of property valuations. And that was the catalyst for me to become fascinated with property data and analytics so we could do a better job of that. We were looking at valuations coming in from all over the country. And it was rather hard to have an underwriter sitting in Sydney trying to understand some of the nuances of cans, etc. So I was looking at data as a better way to empower the underwriters. So that was really the catalyst. And at that time, the company sponsored me to go back to school. So I took myself back off to school at night to study statistics, went off to Canada to meet some of the experts in automated valuation models, or AVMs as we call them, and through America as well. So they were terrific at sponsoring me there. Spent about 7 years in that industry and then moved on to start a company called Pricefinder, which was a competitor to RP Data at the time. So it was a startup. We grew that to a database of several thousand subscribers, and that sold to Fairfax subsequently. So it was quite a successful business. I designed a lot of the price estimate tools and a lot of the functionality in that, but there was a good team there. And a couple of the team that started that are still there over in Fairfax, so they're doing a really good job. So, and then fast forwarding, right now I do a lot of consulting. My main client's a company called JLL, Jones Lang LaSalle. So still doing the same thing in different visors, but with new technology and much bigger data sets than it was 20 years ago.
So have you just got like numbers and stuff flowing through your veins?
Yeah, I can sit with a spreadsheet all day long. And just
enjoy it?
Yeah, I do, because it just I can look at spreadsheets and look at lines of numbers, and I see it. I just see patterns in the data a little bit. So I know that sounds a little bit weird, but what I've learned how to do in more recent times is do a lot of data visualization. So I'm using some of these software tools that then create insights that you just can't get off a spreadsheet, especially when you overlay stuff on maps.
That's cool. And yeah, it's and I spend a bit of time around data-based people, whether they're sort of property data demographers, economic modelling, and all this sort of stuff. And I sort of I'd like to think I've got a particular bent myself towards, nowhere near your skill set, but where I can look at a set of numbers and just visual pictures start emerging, right? And that is the skill in data, is to actually, data's only as good as the information you can deduce from assessing and accessing and analysing that data, right?
It's true, yeah.
And that's a key art form.
I think there's a big problem that's emerging now too with machine learning is a lot of people come out of school and they're experts in that art of machine learning, but not necessarily experts in property data or economic data. And they throw it all in.
Yeah. Interpretation of data, it's absolutely critical. And imagine, Arjun, this is where you two guys have sort of forged a collective path in that with your business, your buyer's agency, you're on the ground, and I know your business quite well, you buy and you support and service your clients to find them growth properties with good yields, right? That's pretty much what you do in a real general sense. So, but you do it driven from data. So did you feel there was a gap in the market, underweight in a particular area for you to go about servicing your clients as best as you could do, hence the reason why you guys have come together to create the Property Nerds?
Yeah, so I guess, starting up with that interpretation of data, that's where there's this starting period of the investment buyer's agent, and then there's the end period. And what I mean by that is the end is that someone wants a property, and they obviously want it to do well, but largely it's around the logistics, time, professional support, due diligence, and that's where I'd say the bulk of the buyer's agency work is placed. There's a small part of investment analysis or research, and I feel that there was an opportunity to really expand on that. And through that journey, people take that in the buyer's agency world, but it's kind of like, that's a given because I'm working with you. Let's go to the actual due diligence, the buying. Whereas there's many people who might be out there going, hey, maybe I have a bit of time. Maybe I really want to learn as much about the data as I can, or maybe I need to really unpack the data a bit more and feel like that's the missing piece, and I'll go roll up my sleeves and do the hard yards. And I think that's where, coming together with Kent and really giving that data a separate piece was something we wanted to do.
How important is access to and interpretation of data in order to be a successful property investor?
It's massive, and I think, this is where interpretation of data can either lead to one of two things. It's either a fair story and maybe you're okay or not okay with the outcome of that interpretation, or you're trying to get as much of it to tell the picture you want to tell. And I think that's where the biggest mistakes start to come up in data, because people tend to have an opinion first and then get the data to follow it.
Confirmation bias.
That's it.
Yeah.
And so if we can start it the other way around, where we go, let's really look at the data for what it is, and is my opinion really valid or not? And I feel as an investor, we're very blessed to have so many cities, towns, areas, suburbs, streets, and houses that we need to lose that bias. And that's what this is really all about.
So we'll get into a little bit about the podcast and what you guys are going to be talking about. I imagine it's going to be about data, but there's a lot of good podcasts. 10 years ago, property education was sitting in a hall somewhere in Homebush or down in wherever at an expo centre with people standing on stage and telling you what's going on, right? It's completely changed. Thankfully, education has been democratised in property, and now you don't have people lining up for seminars getting pitched some off-the-plan apartment from some bloke at the back who's got to charge you or $10,000 worth of education, whatever. It's democratised, which means that it's a lot more accessible for most people. So what you've seen is this proliferation of podcasts coming out into the market, and some good, some indifferent, some are great, some less so. So the information is out there. But what I find, having hosted the Smart Property Investment Show for many, many years, of which I would say was one of the better podcasts, I say so
of
myself,
course.
Some of the criticism I get is, Phil, you don't talk enough about the numbers. Can you go deeper into X, Y, Z? Now, I've got to try and be quite measured and make sure I cover off. And sometimes I'll dig deep into it, but that there reflects the type of investors you have in Australia, the way in which they go about buying property. And some people, when they're buying property, they use a buyer's agent or they don't use a buyer's agent. They often might just give a quick glance at the property data and go, you know what, the bloke in the taxi said I should buy this property, so I'm going to buy it, right? Or whatever. So there's ways in which people invest, but then some people are obsessive about data, sometimes to the benefit, less so. But a lot of those people, it's how they're wired. Like I think of engineers, for example, and you do a lot of work, no doubt, with engineers who only invest based on numbers, and therefore you need to have those numbers to make those informed decisions. So the property nerds, is this going to be, and the podcast itself, is just going to be you guys talking about numbers all the time? And that's a big challenge, right? Because numbers are very visual. So to actually put a narrative around numbers that people can't see can be quite hard. How are you going to play it, Arjun?
Well, firstly, we felt bad for you after asking all these people on the podcast for locations and data and numbers, and no one was giving you the love, Phil. So I think that's where we'll hopefully
gaping hole. Good, because I'm demanding. I want more numbers, and I want more numbers.
Well, we're gonna give a lot of that love,
right,
and I think none of that hiding of the locations either. I think there's many good areas across the country and bad areas, cold areas, what I'd say, right, from a property investing market. So I guess, that's where it really starts. The love for the numbers, to talk to. Kent's favorite line is making data dance or dance, whichever way you want to say it. Yeah. But I think, it really starts off with going deeper into those numbers and painting that picture, but bringing people in from time to time, talking about, how does that data actually marry up to the on the ground? We can't forget that. Whilst we'd like to say properties and shares, numbers, research, analysis, it always does end with a physical house or unit or townhouse, wherever it may be. And so there's going to be that sort of connection, hopefully, to the data and the real world without the lag.
And Kent, from your experience, you've been in the game for a while, from your time at Gemworth, which was around LMI, Lenders Mortgage Insurance, which for our listeners aren't familiar with, if you're borrowing over 80%, you need to be insured, or the lender needs to insure against you defaulting on it. Therefore, you've got to pay for a bit of insurance. Go to smartpropertyinvestment.com if you need more information about that. But is there such a thing, and I imagine you guys are probably going to shape this segment, is there such a thing as a data-driven property investor? Like who only invests on data alone? You see some people in share markets do this. They just look for patterns based on algorithms, whatever else, and therefore they make the decisions on that. Does that exist in property?
It does. I think the buyer's agent space has amplified that because they're all concentrating or going through certain buyer's agents for a reason. A lot of them are high net worth individuals, so they know numbers, they understand wealth, and they make decisions based on the investment potential, whereas I think a lot of small-time, first-time investors and owner-occupied make a lot of decisions based on love. And I don't think the seasoned investors let love get in the way, so they make it on hard numbers.
But when you look at, I guess, the pooling of the talent of you two guys under the Property Nerds banner, you love to make the numbers dance. I get what you mean by that. And Arjun on the front line looking for properties. What is the perfect mix of investing based on numbers versus being on the ground truth, the realities of what's happening, because they're two very, very different things and you need both? What's the perfect percentage if it exists?
Yeah, what we typically do is we've got some models and formulas that we create based on the user's requirements, and they vary. So we've got some templated models that we create that spit out a list of regions. And then what we try and do is keep a lot of our analysis to that region level. And then that gives them a lot of freedom to then go and drill down and find the golden nuggets of suburbs and then beneath that, the golden nuggets of the individual properties. So there's plenty of scope for the old school search and obviously looking at the individual property. So we do a lot at the regional level with a lot of modelling. A lot of economic modelling, a lot of property data modelling. So we look at key trends, we look at scorecards, and we do those based on different visors or different end user objectives.
I've never heard of this analogy before, but I'm just, as you're talking, thinking about it, like it's fishing where there's fish, right? So like you use a sounder on a boat, you're driving somewhere, I'm going to go fishing today, right? You're driving along your boat, you got a machine that goes, hang on a second, there is fish here. This is the right place to actually now start putting the right bait at the right depth, at the right time of day, et cetera, et cetera. So this is the intersection between data and then I guess the talent or the sophistication of ground-based, truth-based investing. Arjun?
I've never been fishing before, but that's pretty much it. You nailed it.
Yeah.
And
I'll own that. There we go.
And I think it's getting people one step closer to a better decision. And I think there's this big disconnect between starting your investment journey and the end property you buy. And I think with what Kent mentioned, what you mentioned, the analogy is it really cuts half that distance away. So now you're at least where the fishes are. And this is when you got to really roll up the sleeves and add that final touch. But knowing that you're there, it's a huge start. And that's what we really want to bring together.
Cool. So I want to get into the podcast itself, but let's go to a break beforehand. Back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show, in the studio with me today. A couple of nerds. And before coming on air, we actually had a discussion around what the collective noun is for multiple nerds. So if you've got any views on that, get in touch. Editor at smartpropertyinvestment.com.au. We haven't worked it out yet, but no doubt we will do. The Property Nerds, brand new podcast coming on the Smart Property Investment Podcast Network for 2021. Arjun Paliwal from InvestorKit and Kent Lardner from Suburbtrends joining forces. Data, dancing data meets property search and buyer's agency. How are you guys going to, tell me about the podcast, Kent, like how are you going to structure every episode? You're going to be like, talk about the data and then what it means, or here is some data, let's work it out. You're going to challenge confirmation bias. Tell us about it.
Yeah, we want to look at some of the big trends that are happening. So I think I like to start with some of the big data releases.
Yep.
So if there's a key trend that stands out or a big data release that stands out that's meaningful and interesting, we double down on that. We look at that, how that impacts certain markets. So we look at the correlation between those data trends and certain regions to see what's happening. Then at the data level, specifically at the data level, we pull out some select regions that are showing some interesting insights as well. So we do some data dives or some regional dives as well. And then we just talk about a few interesting use cases. So we'll have, acquired a few, there's always a lot of headlines. So, we want to look at headlines that we agree with, that we don't agree with. We want to see how balanced they are. So we want to pick on the headlines as well.
So as the property nerds, data has been democratized in many ways as well. We're talking about education, which is a good thing. There's a lot of very good manufacturers of data, I guess you can call them that. So are you guys going to be in the business of manufacturing data, or is it going to be more of an aggregation of and therefore applying your own views to sets of data to have your own learnings? Which sort of side of the coin are you going to be?
I do a lot of data visualization that we're putting on the site. So we've got something called the Data Hub.
Okay.
So there's a suite of tiles you'll see across there that display a whole stack of things, and ranging from, and we'll go through it all in detail, but suburb searches all the way through to inventory and vacancy rates, and we can talk about that, what's in there. So there's a whole stack of data there that we've democratized and we've made free on the site.
Okay. And Arjun, how much of the backbone of the Property Nerds, which just isn't a podcast are you guys talking about the stuff that you're doing? Is there a website that's going to be connected with this?
Yeah, so the propertynerds.com.au.
Okay.
And, I guess the first and the main key part of the Property Nerds is really going to be that data hub, right? Giving someone a place where they can go, what are the vacancy rates? What are the trend of sales listings, rental listings, job creation, internal migration, the whole suite on a suburb level, and much, much more, inventory level, even risk level. So imagine going in and saying, how high is the potential risk in my suburb? So just really opening up the world of data and getting it out there to people, but then also giving some people a bit of secret sauce in terms of where some of the top locations are. So that's what we're really opening up through the Property Nerds.
What I find, having spoken with hundreds, if not thousands of investors, and back in the day when there used to be property investment magazines, the last 20 or 30 pages of it used to be property data, right? Where you list every suburb, right? And I used to watch people pick up a magazine, Smart Property Investment, back when it used to have a magazine as part of the platform. They wouldn't look at the magazine, they'd pick up and they'd flick straight to the back pages and look at a suburb that they're considering right now. So this is the confirmation bias.
You've nailed it. That was the inspiration. That was for me. Doing the same thing, but going into the airports. And the investment magazines were always front and centre in the airport news agencies, and people would flick straight through and they'd look at the 3-month change, and that was a bit of the problem too. And the opportunity here was that median growth at a suburb level seemed to be the focus, and I hate that.
Yeah, and so then, Arjun, how much of the Property Nerds and what you're developing here is a product of maybe what you've felt as though there's a bit of a hole in the tools in which you had to shape your career as a buyer's agent? Is this like you've created what you want in order for you to do your job better, and it didn't exist, or you didn't think it existed in an aggregated or curated version, therefore you've gone about doing this? It's
a bit of both. So I think, we've really talked about the data leading us to the fishes, should we say, right? So where it is, and that's been a big part of in terms of the enhancement at our buyer's agency and how we've continued to improve through that. But the next part's really been about, there's so much conversation about the right house or new versus old, or, do I buy in that city? Okay, well, let's talk about the LGA even. Brisbane's LGA over a million people, geographically one of the biggest local government areas. So people are stuck either way too broad or way too little. And so I think that was a big gap of really tightening it down and talking about certain regions in a way that it gives them enough guidance to go, hey, you know what, there's something happening in these clusters of suburbs, or as we call it, the SA3 region, a little data nerd thing there. But with the cluster of suburbs, that's going to help people start to make better decisions. And so there's the gap of better decisions from being too broad or being too low, and then also the fact that it enhanced what we were doing internally as a buyer's agency to professionally select properties.
And this is the utility of data, which is what data is all about. Term of endearment, nerds, and hopefully, as I mentioned before, I'm not offending anyone with this. I didn't choose the name anyway, so blame these guys. But I'm picturing a couple of guys in white shirts, pocket protectors, black rimmed glasses, bit of sticky tape around the nose. Am I going to see this when I go to the propertynerds.com.au? Please tell me you got a photo like that. I really want to see it.
Well, we've got, 2 potatoes as our little logo.
Yeah.
The slightly brown potato being me, and yes, we do have the glasses on both of those potatoes as well. So a lot of nerdiness will be out there.
All right, this is good. Now, to give our guests a bit of a flavour of what you guys are going to do, let's pick something just to give some sense for how I'd normally have a discussion around on Smart Property Investment podcast, data-driven stuff. So the information in the market, where we are right now as property investors, is that everyone's talking about it. There's going to be a big run on property over the coming period, a lot of it driven by inherent fundamentals, which look pretty good for Australia as it emerges out of COVID-19. When you consider data, and Kent, maybe a question for you, COVID-19 has shaped and changed in which a lot of Australians think and feel about, or the sentiments towards their personal wealth.
Yes.
And a lot of people have gone through a journey through that, as in everything's gone bad. Now things aren't that bad. And hang on a second, things are looking pretty good. I might start doing some more property. Talk me about how data is a tool to help shape that decision-making, shape those changes, those shifts in sentiment.
I think COVID's been a fascinating journey so far. I was using data to actually identify what are some of these trends as a result of COVID. And one of the first ones was the rental market and the impact in the CBD. So that stood out. And so I think COVID has brought about a new awareness, obviously, of, where should I invest my money? How careful can I be? There's things we don't know yet, obviously, what will happen on the horizon. But I've got a few theories. And one of those theories, I think there'll be a flood of people back into the cities, especially the young people. But at the moment, they've exited, clearly. And we can see in the data that the people have exited the CBD high-density areas. areas. They've moved out to the outer suburbs and the outer regions. There's a rental crisis outside of the CBD as well at the moment. So, if you're an investor in one of those outer regions, you would be pretty happy because your yields would be high, your returns looking good.
If you've bought the stuff that people want to live in.
Yeah.
Yeah. And I tend to agree with you. I think there'll be a flight back to CBDs only in, talk about New South Wales, where we're recording from, I think on the 14th of December, the mandate around the state government saying if your team can work from home, allow them to work from home, changes to get back into the CBDs. The CBDs being the heartbeat of the capitals, and so much of the economic prosperity is built around the CBDs. So what you're going to see is that people are going to start coming back in. Guess what? People are going to start moving back in. Jobs are 70% of all jobs that were lost at COVID are now back in place. A lot of those jobs which were disrupted, retail, hospitality, for example, come back in. Young people are going to start moving in. So these are the type of trends you're going to be looking at.
Yeah.
And drawing it. So will you make assessments and therefore recommendations around that for property investors?
Yeah, as long as there's the fundamentals there. So we try and leave the heart out of the equation and let the data speak. So certainly for us, we've seen a shift away from the cities out to the the 2 to 3 hour lifestyle locations. Great, but as long as those suburbs or regions have some fundamentals about them, you wouldn't necessarily just say tick, wow, rents have gone up, vacancy rates have gone down, go and spend your money there. But there are a lot of areas that are ticking a lot of boxes in that scenario. But I think at the end of the day, after this COVID period finishes up, there'll be a lot of people with a lot of interest back in the cities for the same reasons they had it 2 years ago or 18 months ago.
So outside of that particular trend, what else do you think we'll see as a result of COVID in terms of property data?
Well, a couple of key things we've seen in the data as of last month. I've just started to look at the theory that people were looking for the larger properties, work from home, getting out. So there's been a very significant shift and a difference between if you partition the suburbs that have a median of 3 bedrooms as Group A, and then you partition off the suburbs with a median of 4 bedrooms as Group B, there's a 1.4 month difference in inventory between those two groups. It's quite stark. So there's a
higher on the floor?
So there's a very, very low level of inventory. So 3-bedroom suburbs has an average of about 5.4 months of inventory at the moment. If you then partition off the suburbs that have got 4 bedrooms, there's 4.6 months. So it's nearly a month's worth of inventory between those two. So that's a significant variance.
Yeah, and I guess, Arjun, I don't know many property investors who would be using that sort of metrics to invest in property. Maybe that's the reason why people use buyer's agents. You would use an overlay like that when making informed investment decisions, right?
Yeah, so I guess inventory levels are so crucial to understand market pressure. Now, the lower the inventory levels, the lower the amount of stock online in comparison to what sells. So when you start seeing that, you're all of a sudden seeing faster selling, less discounting, and that usually tends to lead to increasing prices. And so that's the part of the interpretation where, COVID's creating this shift. And overall, I think the biggest shift over the last 12 months has been how low inventory levels are around Australia. Most markets, it's not like these days where you can just pick out this one hotspot and say, oh, I've got a very special place. Because every single person around Australia these days has enough locations out there to say something's moving up quite well. And that's due to the nature of low stock. So seeing that across the 4 bedders versus the 3, it does tend to move on to price pressure.
It's interesting, people talk about the basics, fundamentals of supply and demand, right? If there's more people that want to buy stuff, property prices go up. If there's more people that want to sell than there is buyers, property prices go down. Really simple, right? But you've got to dig deeper into it because some of them might be 3-bedroom houses versus 4-bedroom houses. There could be very, very different sentiments towards it. So that's a skill in being a data-driven property investor, which no doubt the Property Nerds podcast is going to focus on. We're going to have another break, guys. I want to keep on this data trend. I've got some other questions here and pick your brains as you get set for the launch episode of the Property Nerds in 2021. Back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyer's agency.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Kent Lardner and Arjun Paliwal, the property nerds. Look at that, already calling them that way. A new podcast that they are launching in 2021 is going to be hosted on the Smart Property Investment Podcast Network. So make sure you subscribe to the network so when it does come out, you're one of the first to check it out. Now, before we went to the break, we're talking about some of these data trends as we saw as a result of COVID. And now we have a lot of people, Arjun, who are looking to capitalize on what is seen to be a pretty good property market. Money's super cheap in March of this year. It changes to the bank's responsibility in how they lend money for the betterment of property investors, so they should be able to borrow more. This is responsible lending stuff we're talking about. But data only gets you so far, and we spoke about this intersection between narrowing your scope into regional areas, into regions or suburbs, and then looking at individual assets being critical. But you can get caught up in data, and there's a lot of pitfalls in using it the wrong way. What do you see as the most glaring ones from your experience, Arjun?
I'd say the biggest mistake I see is people not quite separating something I call cause versus effect. And so let me give you an example and localize it to, say, something in Sydney. We've got the big Badgerys Creek Airport precinct, massive, and I'm talking huge infrastructure, massive, billions. But this timeline of which the infrastructure has gone through in terms of 3 phases: announcement, yay, the ribbons and whatever. 30
years later from when it was first, yeah.
And then all the name selections as well. Nancy Bird Walton, is it?
Yeah.
And
one
then
of the great aviators, aviatrix.
There you
I
go.
think we'll call them, yeah.
And then you've got the in progress, construction jobs coming, people coming through. And then you've got the post. Imagine a life where the planes are flying in and out and cities around it, jobs, shops and whatever. Now, the problem is cause is going, that may cause growth. And the truth is, they're right. Infrastructure projects will make an impact. But the effect is going, well, is anyone selling faster yet? Is anyone having low stock yet? Are people discounting less? So I would say the biggest mistake is people go in with the thought that the infrastructure means, yes, money's going to happen. We've seen that in parts of Brisbane and other parts too. They go in there and they're waiting 5 years, 6 years, 7 years. This is the cause. So if people start to look at data to the next part, which is, hey, unless people are running around headless and open homes, it's actually not growing.
Yeah.
And so that's when we're looking at the effect. And I think if people can focus more on going, great, you've got the infrastructure there, but look for that second, not first. Because if the effect is starting to come and it has not grown by a lot, then that infrastructure is now making a difference. And so I think that's the part where people can kill opportunity cost when they get that right.
Yeah, and I think what you're talking about there is the complex matrix of what supports capital growth, right? And government investment is just one of many different factors which support that and going, hey, there's going to be a new airport in Badgerys Creek, jobs, growth, people. Yeah, that's all cool, but there's a whole bunch of other moving parts to it. So that was well explained, Arjun. For you, Kent, what do you see as one of the biggest mistakes people make, or the biggest mistake people make when using data incorrectly?
The biggest problem I see at the moment is a reliance on medians at a suburb level. We've got a lot of suburbs along the seaboard that are bimodal. When I first showed the distribution and the shape of that to Arjun, he looked at it and said, oh, they look like boobies, 2 shapes, 2 distributions. And he giggled like a 3-year-old girl. But I think the biggest problem is with the medians when they're very, very small samples, or they're not normally distributed, or they're bimodal, they do cause a lot of problems, especially if you're making an investment decision on a flawed set of data.
Yeah. That's good. Yeah. A lot of, and this is going back to the point where people used to flick through magazines. It was always around data can be hugely skewed based on a handful of sales. And by that, I mean, if you're in a very established suburb and there's a cycle of infill happening, and what's happening is that people are buying up 4 houses, getting a block of land, and then building 50 or 60 flats on that same land. This can fundamentally change the data makeup of a suburb immediately. And a lot of people don't understand this.
Yeah, I think Labrador's a good example. Right now, if you look at what's for sale in Labrador and your Gold Coast North there, duplexes everywhere. And if they're overcooked and they're overdone, you end up with oversupply pretty quickly, even though it's classified as a house.
Yeah.
So I think Labrador's a good example, and certainly with the home unit side of things, Melbourne has just had this constant supply issue. It's been recognised for the last 15 years and it hasn't stopped. And I think it's really been amplified with the exodus of students.
And this is utility data again, where you use data to give you the clues of indicators around where they're. I don't know many property investors who invest to get negative equity, right? So it helps you identify those areas which are going to grow in value, but then you actually need to get in your motor car and drive around and go, hang on a second, they're all duplexes, which you might not necessarily see from a Google map. Data might not show that unless you know how to look at it. You've got to speak to the property managers and the buyer's agent in those areas, getting the ground truth and what's going on. So I look forward to the Property Nerds podcast to see how you guys are going to navigate that stuff using words rather than visually. But no doubt you do well. Hey, Arjun, tell me about this data hub part of the propertynerds.com.au. What's it going to be? What's it going to include? How do you use it? Etc.
Awesome. So the Data Hub, just touching on that from earlier, it's a free part of our website where people can go in and really play around with understanding their suburb or the suburbs they're looking at. And some of the key metrics we've been looking at in the Data Hub is around how quickly is stuff selling, the migration that's happening in the region, the job creation, vacancy rates, listing levels. So really it's that equation of what I call demand, confidence and supply all come into picture on one go-to area. It's totally free for people to use. They can jump on it and just go crazy, just try and figure out what's happening in their areas or other areas.
And that's got to all be available at launch? It's not like waiting around for it. It's all going to be there, ready to roll?
Ready to roll.
And it doesn't cost anything?
And it's free.
Okay. Now, I'm told that you've got Australia's top 20 property investing regions 2021 coming out. What's all that about?
Well, the two nerds came together and rolled up our sleeves and had a bit of back and forth on good regions, cold regions, and it was tough. Honestly, it's been very tough to figure out what would be the top 20.
Yeah.
Because now we're heading into some interesting times where there's a lot of regions showing some buzz. But I think it's simply regions across the country that we feel are likely to show some very good promise and are showing some very good promise across all those factors that matter.
Yeah.
Combination of the big stuff, the macros, the infrastructure, what's happening, down to the smaller stuff, the data of how quickly people are selling and how much is online. So all the competition that people have to go through to buy stuff. So
you guys know, Kent, you know what the top 20 is, but you're not going to tell me right now.
I'm not. I know. I'll have to kill you.
Yeah. How do I find out? You got to give me something. Give me a teaser, a taster. Give me one. Come on.
We brought one along. It's Sutherland, Menai, Heathcote. So it's.
I already knew that. Actually.
Yeah. That's right. So we can go home now. So the statistical area 3, SA3 is what we use. That's the Australian Bureau of Statistics. What they do is they've carved these up. We analyse about 500 of these. So we look at about 350 housing markets at an SA3 level and about 150 odd or up to 200 unit markets. So a lot of the areas don't have enough units to really warrant calling a market to analyse. So so we're doing about 500 deep dive in about 500 markets. We mainly focus on houses at the moment. So that's our big focus.
And why is that? Because you think they're better investment grade or?
A combination of multiple factors.
No doubt the data tells you this, but...
Well, the number one reason for me is controllables, right? Once an area of houses are built out, I think we can all agree that there's not going to be many more houses. I'm sure there's a couple of areas where houses turning into duplex or granny flat at the back, and that becomes popular in a few areas, but you can go up to the sky forever. So what might be some valid data? It changes very quickly or it can change in large amounts. So that's probably the shock factor that we don't like as data people because it's out of our control and that's where the control freaks in us come out.
Yeah. Are data people control freaks?
Yes.
Yeah?
Yeah.
Do you go to like Data Nerds Anonymous or something, DNA? There you go. maybe on a Friday afternoon you could all sit around here and talk about your.
Hi, my name's Kent. It's been 3 weeks since my last spreadsheet.
And by this, I'm not giving AAA a hard time, but but you guys are on. You're just obsessed.
Yeah, and look, in the data space, you spend most of your time cleaning the data and getting it ready to consume and use.
Yeah.
So you're kind of dwelling in the dirty stuff, trying to get rid of it and make it behave. That's the bulk of your work.
Yeah, and how do you go about personally approaching the assessment of data from a position of neutrality rather than with a confirmation bias? Because I think this is a key question for all of us.
Yeah, typically we have some scores. So we just effectively have ratios or cutoff scores and, the cream rises to the top in those models. But the other thing that you do is there's something called machine learning where you can put in lots and lots of different data variables and that can spit out a lot of nuances and decision nodes. You can say, oh, hang on, what's happening there? So the machine can tell you some stuff. So, I use machine learnings not just for the models, but for the insights.
Cool. Well, it's all pretty exciting, Arjun. So what we now know, and you've heard it here first, the Property Nerds podcast to launch in 2021 in January on the Smart Property Investment Podcast Network, which is linked with the development of your new business called the Property Nerds. JV between you two guys. Anything else? What do we do? What do people do? When's it going to be live?
Well, mid-Jan,
Okay.
we're looking at the first episode of the podcast.
Yep.
And it's live right now in terms of the website. So if
Okay.
anyone wants to jump on the Data Hub, they can. And if anyone wants to grab a copy of the top 20 property investing regions of 2021, we've given away one clue and there's about 19 others in there still to be found.
Yeah, okay. Well, best of luck, gents, with it all. Hope it goes well.
Thank you.
No doubt you'll have a whole bunch of people, those people who are data-led, who just go, wow, another source of, not just data. Data is just data. The interpretation of data is the science to it all. So I look forward to checking out top 20 property investing regions for 2021 and having a little sniff around your site, see what you guys are up to. I like a bit of data. So the way I do it, I normally pay for good advice where someone else goes, hey, we've read this data and we're therefore made the decisions buy this house. I go, that sounds good. That's why I use a buyer's agent. But anyway, best of luck, guys. If I don't see you before the Christmas period and holidays when you come back for recording the Property Nerds podcast, I hope you all go well and best of luck with the launch of the new business. I think it's good to see you out there giving it a red hot crack.
Thank you, Phil.
Thank
Nice
you,
one.
mate. We're going to get fishing under my belt for me as well, something new. So.
Well, if you want to go fishing, I know someone that does enjoy fishing. So, mate, you can get into that, you fish where there's fish. So simple. So simple. The hard bit's working how they're going to catch them. But anyway, remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, so the first to know what's going on in property right across this great nation, smartpropertyinvestment.com.au/subscribe. Social media, Smart Property HQ is where you find us. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.